Our investors, listen, I'm going to do an analysis of NIO. For those of you who don't know, it is a car company, an electric car company. It's a Chinese company. You can trade it in the US. You can trade it internationally. The ticker symbol is NIO, and what you'd be trading is a VIE ADR, which means basically a company that is based in the Cayman Islands according to their 20F filing, and it has the right to purchase shares of NIO, the company that is based in China, if that is ever allowed by the Chinese government. They also have contracts to retain and distribute any kind of dividends or profits that management seems to want to distribute to their shareholders. They have the right to those profits as well through the contracts. As long as those contracts hold, everything is fine and dandy, and those contracts have been holding for a very long time, just like with Alibaba and JD. So the first thing I'd like to do is talk about price. We're going to come back to the website later. Now, the company's experienced a recent interest from market participants. As you can see, yesterday it got a gain of 10.5% over that. And then overnight, it's boosting another 3.72%. Who knows what's going to open at? Currently, it's 3:42 a.m. on 7/27/2023. Price action on a 5-day chart looks like this. It's up 25.79%, along with a lot of tech sector stocks and Chinese ADRs. ADR stands for American Depository Receipt, and it's basically a way for foreign companies to list on U.S. stock exchanges, so you can trade them, over the counter, basically. I'm sorry, not over the counter, in the stock exchanges. You can trade OTC, whatever is not listed on the stock exchanges is just less liquid, and you're going to have to hit up sometimes individual banks and financial institutions who have some of those shares and offer them a price that is suited for the lack of liquidity that you're going to be experiencing if you're trading OTC. Some shares that, a good example of that is actually Tencent. You can trade it OTC in America. Okay, now year to date, it looks like it's about plus almost 30%. 1 year chart, of course, negative because China had a really poor 2022, just like every other company. Chinese equities is what I meant, and also 2021. If we're going that far back, the troubles in China started somewhere around January, February of 2021. As you can see, that everything peaked out at that moment. Then it's been in a downtrend almost ever since, and it seems like it's turning the corner here. So a lot of investors are looking to pile into companies like NIO, JD, Alibaba. I made videos on Alibaba and JD already, so feel free to check some of those out. Some of them are more comprehensive, the longer ones, and then the shorter ones are just kind of like what I've been doing as far as trading. I share all my trades on the channel and all my losses and all my big wins, so you can check those out if you want. Moving on, the next thing I want to talk about is financials before I even go to the website. Actually, okay, let's do the website first. So this is the website. It's a little zoomed in right now, and just scrolling through, this is pretty clever here. If you don't know what their logo means, basically the sky and the earth and vision action, they're very they pride themselves on being a very holistic kind of company, save the flowers type of deal. The only thing that really throws me off about the website, this is one of the reasons I look through websites, is because I want to get a feel for the company itself and what they're about. Like, sometimes something will catch my eye, like a fly on a wedding cake, and I just know that something's off with the company. But in this case, it's their little Nomi AI you see here in the lower left corner. That's basically kind of their Siri or their Alexa, right? Or their Google or their whatever little AI thing inside of the car that you can ask to do whatever. Basically voice activation. I mean, we've had this technology for a while, but I'm sure it's a lot better now. I mean, my 2007 Beamer has voice activation, right? Like, I'm selling it now. Okay, I got another Beamer, but it still has voice activation. So I mean, technology's been around for a while. I don't know why adding a, what were those things that you used to wear on the keychains? If you're in the U.S., Maguchi or something. They're, I guess, a Japanese thing. You wear in a keychain, and it's like a 4-bit type of picture of like a pet that you feed or something, Tamagotchi or something like that. I forget what it's called. But anyway, that's exactly what it reminds me of. I mean, some people probably think it's really cute, but you're definitely eliminating, a lot of your audience when you put stuff like that in the car, like especially your classy audience. And this is one of the biggest problems I have with NIO. I'm just gonna talk about the products for a little bit. As I go through the products, they obviously make very high quality cars. There's a few things that are off with cars, in my opinion, anyways, and I can judge that just by the website. Just by looking through the website. If something just a little bit off, that's exactly what their products are gonna be like. They're gonna be high quality products with all the latest technology. They're just gonna have some things that are kind of off. So I think this Tamagotchi thing is one of those things that it's a little bit off. Like, can you honestly see like a buyer, a very like, either hardworking or classy executive or something like that, trying to ride around in a Neo? Well, do they really care about a Tamagotchi AI in their car, like making heart shapes with their hands and have these two eyes like moving around? Like, it just seems so gimmicky, so it really throws me off. Like, it's so different than, let's say, like a Porsche or an Aston Martin, or like, a luxury minded car, which is kind of what I think NIO is trying to compete with, or maybe in something like of Rolls Royce or something like that. Although the pricing point is a bit lower, so Mercedes, like high end Mercedes, or even like Teslas, I think is what they're trying to compete with the electric, the electric German cars or something. Although their model is a little bit different, I want to talk about their model too when I get into their 20-year filings. I want to explain exactly what their model is like. But that immediately threw me off. Like their little AI. I also watched videos of it, and it acts exactly like it looks. Okay. So, furthermore, let's go into their products here. So the models of all the cars. Let me see how much you can see. You can see enough. So the models of the cars are listed on the left. Okay, I'll zoom out. Fine. You convinced me, okay? You convinced me. I'll zoom out a little bit. Alright. Products of the car products are listed on the left, and you can see the pictures on the right a little bit to get an idea of what it is. They basically make sedans, SUVs, and crossovers. Their ET series are the sedans, the ES is the SUVs, and the EC, I think, is the crossovers. If this reminds you of Tesla cars, you're probably not alone. I mean, they definitely look like Teslas, the roof, everything. Inside, the interior does remind me also of, it's a little Tesla-esque, except the materials are a bit like higher quality, but it definitely have that like smooth trim, and they have that disease. Okay, I'll call it a disease. It's like the big iPad in the middle of the dashboard disease. Like, it seems a little bit lazy to me, to be frank. Maybe I'm old-fashioned and old school, but that's not minimalism to me. It's laziness. I was really upset that even the Germans caught this disease from, like, the 2013 to 2020ish, where they would just slap like these iPads sticking off of the dashboard, and it looks absolutely hideous. Even my favorite car company, Aston Martin, did this for a few models, and it just completely pissed me off. I couldn't stand it. So maybe I'm just old-fashioned, but that's just not class and just not style. Every car did it, like Mercedes, BMW, you name it, Audi, everything, including obviously all the Asian cars. And it's just everybody was rushing to put technology into their car, and this is kind of what they did. And now, the electric cars are continuing this trend, and perhaps their target customers don't really care about style. and feel and all that. And there maybe it's worth it for companies to do that, but anyways, I'm just not in favor. So these are the mugs they have out for offering. They're not sold in the US quite yet, but they do have plenty of presence in Europe and in obviously Asia and China, and they're trying to break into the US. They have an office in San Jose at the moment, in Silicon Valley. So, all right. Next, I'm going to talk a little bit about what I see wrong as well from the website. Is this NIO House thing? Okay, so it's not just NIO House. If you go to their site, you'll see that it's not. There's all a bunch of other things that you can buy with that comes with the car. So they have 125 NIO houses across the globe, and it's not just the house though. It's like, let's see, beyond the car, you got NIO Life, NIO Power, NIO Service. Like, I understand that they're trying to do, like, create a mode, kind of like Apple, where, you buy the product and then you gotta buy the service around the product. You gotta buy, like, memory storage. You go to Apple to fix your phone. Then you buy, like, the Apple cover. You buy the Apple earbuds, the Apple laptop, and the Apple everything, right? And so your entire life is basically Apple products. I only have the phone, by the way. No other Apple products. Only the phone, because I can't stand the Android, iOS, and this is where I lose half of you. So anyway, but NIO is trying to do something similar, where they have a service that comes along with the car. However, I think it's a little bit of a mistake personally, because although yes, that makes sense on a business from a business point, I don't think they have the clout to do that. And to me, it looks a little bit like putting the cart in front of the horse. All right, this NIO House thing, where you get this membership, you get to hang out with all your other NIO purchasers and form like a little NIO club and text in your NIO phones and drink in your NIO cafes. But it seems like you can only really get entitled, you can only really pull that off if you're like number one, or at least have a very established brand that you can wrap that in. Like NIO, to me, maybe I'm wrong, let me know what you think about the company's products, but they're not like, technology wise, obviously they're very close to the top, but they haven't established themselves. They don't have like necessarily a pedigree. Like, they're a pretty new company. I mean, it's by definition, it's a growth company, and they're already starting to like shoot off these like benefits and services and subscriptions, and like trying to form a club, some kind of prestigious thing. But the name carries that with time, right? With consistent performance. Like if Ferrari did this, I would understand, and they kind of do, right? They have some kind of stuff like that. But if Ferrari did this, then yes. If Aston Martin did this, yes. McLaren maybe, right? Rolex, okay, Louis Vuitton, like just brands that have been around for a while. They carry a certain amount of cachet. Like, I think NIO is still trying to work its cachet. That doesn't necessarily have it right now. I mean, it's still like developing. There's still quirks that need to be worked out with their products, right? They're still trying to expand and get that global respect. They don't necessarily have it yet. Even if the products are improving drastically and the customers are happy and whatnot, I just don't think, like, it's a little bit off-putting rather than welcoming, right? Like, it's not off-putting if Ferrari got the Ferrari house, okay? But let's say you have what's a good example of a company that's kind of like, I don't know, can't think of one right now, but a new company is coming on the scene. All right, I'm gonna mention Beyond Meat. Okay, it's a perfect example actually, because the companies are just as young and trying to break through into some kind of market. Let's say Beyond Meat, started. It's like Clubhouse, and you can get Beyond Meat housing subscription, where you and all the other Beyond Meat eaters can gather and talk about how you eat Beyond Meat. and have like, Beyond Meat service to deliver Beyond Meat products to your door or something like that, or I don't know, exchange your Beyond Meat patties that you're gonna use in your Beyond Meat burgers. Like, it's just a bit pretentious and it's still too early, right? You gotta establish yourself as a company first and develop and just prove that you will deserve to be at least on a level from quality standpoint and top of the list. But anyways, that's enough about the products. I think I've made my point. There's just some things that just kind of like tip me off when it comes to the leadership, or maybe I just don't understand like the Chinese culture, which is very plausible. It's probably the case. I just don't understand it, and perhaps they're going to modify things for the European and the U.S. audience. I do understand European audience as well as U.S. audience because I am European and I've lived in the U.S. for most of my life, so I understand both audiences to a certain extent. So anyways, I'm gonna go into the numbers now. Now, I'm gonna be using stockanalysis.com. Okay, we're gonna look at financials first, and stockanalysis.com is a free website. I am not affiliated with anyone, so just whatever. I just use it because it's really convenient, and yeah, just shout out. We're going to go through the numbers here. I'll show you where to find the 20F filing and how you can look at all these numbers directly from the source. So the 20F filing, let me just tell you, this is it. There's some really interesting things you can learn from here, and especially the fact that it's got US GAAP, US GAAP accounting, general accepted accounting principles. Which is awesome because the numbers will make sense to American investors and accountants. Whereas, if you just get the Chinese numbers, their accounting rules are quite a bit different, and there's a great bit of confusion, and it has been in the past when it comes to the numbers. But with this information, we can be rest assured that the numbers check out, and we're not going to be deceived by, unintentionally deceived. I'm not claiming any like malicious activity at all on the accounting's part. I'm just saying that things get lost in translation, right? The way the numbers are presented. Because there's different classifications when it comes to like, there's a bunch of different classifications, just income coming in, like how are you going to classify it, right? And just cash is not cash, right? Some cash is sitting on time deposit, some cash is like set aside for some purchases, some cash is incoming, hasn't arrived yet. So there are different classifications, and it's good that the 20F filing is in GAAP. First of all, the way you find it is you go in the profile here. The quickest way to find it is from stockanalysis.com, and at least the way I like to look at it. And then you can see all the latest SEC filings, and you can view all SEC filings because these are just from a recent purchase from UAE, from Abu Dhabi. They bought a bunch of shares, I think 7.7%. So there's a bunch of filings here that you can read through, discussing the purchase of the funding. So you click on see all, and then here's the 20F. You can even view interactive data, which you can click around and see all the different types of number reports that you want. It's very, very useful, especially if you got the time on your hands to review the numbers. I strongly suggest that everybody here does their own due diligence on any kind of investment that they make, but especially on one as risky as this. Okay, there's risk here. The Chinese government could decide that the VIA structure is no longer viable, and you could lose 100% of your investment. Look, it happened with Russia, right? Russia went into a war. We stopped trading with Russia. A lot of people, including myself, lost some investments in Russian companies and assets, right? So all of them kind of went to zero, stopped trading / gone to zero, same thing basically. And yeah, so that this kind of stuff carries risk. Investing in foreign entities carries risk, but investing in anything carries a lot of risk. I mean, U.S. is not risk free. Everything carries risk. Putting cash in your mattress carries risk. Turning everything into gold and burying it to the ground carries risk. So that's just a little wisdom tidbit from me before I move on forward. So you click on the 20F. You come. You can do the interactive version. This is the actual version here. This is interesting for those of you who don't know, is the structure here from the VIE. I think it's varied interests entity. I think is what VI stands for. It tells you the onshore and offshore portion of the basically the business structure, and it's very complicated. So, but all you really need to know is that you're buying into Cayman Island entity that has contracts for the profits and dividends distributed by the company that's based in China. Okay, so if you have time, look through it yourself. Now, back to the numbers. We're gonna look at financials first, and looking at the revenue, right, which is the most important metric for any growth company. First of all, this is in Chinese yuan. This is not in US dollars. So the revenue was not $49 billion, it's 49 Chinese yuan. And looking at this, it's obvious the company is growing, right? From 2018 to 2022, the revenue is growing. And however, I like more definition in my numbers. And if I click on quarterly, what you'll discover is that the revenue is actually kind of plateauing. The revenue is kind of plateaued, and outside the two bumps here in the early 2022, late 2022, it's been kind of stagnant. Of course, there might be another boost, especially now that the Chinese businesses are getting some, reinvigoration from local authorities stating that, once again, they're going to support local businesses, Chinese businesses. However, what's even more important is that, big players like Tencent CEO piggybacking on those statements and trying to reassure that Chinese business is going to be up and flourishing. In the 2021 2022 crackdown, it's not meant to be like the death of all the Chinese businesses. So the revenue is struggling, which it's not great, considering the fact that things like operating income is declining. They're starting to lose more money as time goes on. You can see that right here. Not only is the income declining, but because they're trying to expand, I guess, or they're trying to draw up more business, their cost of revenue is going up just as much as their revenue. This is cost of revenue here. But also they're slowly, leaking shares, so they're selling more and more shares in the open market. Besides the big sales in 2018, 2020, they've been leaking a little bit of shares every quarter. So, that's interesting. Another interesting data point here is on the balance sheet. If we go under debt to net cash over debt, you see how it's been trickling down ever since late 2021, even through the record revenue generating quarters in late 2022. This has not been going in the right direction, right? Not been going in the right direction. They're spending way too much money, and it's not translating necessarily in enough growth. So this is really the big problem that I'm having with NIO, is that all these perks, them putting the cart in front of the horse in the metaphor, prohibits the horse from striding forward as fast or at all. As fast as it would have, or striding forward at all. Like, it's kind of stalling the horse a little bit. So I think that all these leases, I don't want to go through the leases now, but all the leases and stuff that they have for their 125 NIO houses around the world, okay, that weighs quite a bit. I mean, it's taking a lot of money. They could have gone in more research and development, could have gone in more production, it could have gone in expanding. Like this, service for the NIO, like, preferred VIP status, or whatever they're trying to, build the company's image to be, is not worth nearly as much as actually being more efficient and delivering better products that speak for themselves. So this is kind of the big problem I have in NIO, is that they're overspending, I think, on things that not actually improve the core product. But every single successful company has started with a good core product. Like, if there's a problem with the core product, doesn't have an edge, right, over the competition in one way or the other. It's not excelling. It's not the best in the world in at least something. Then all this other frivolous stuff is just going to fall flat on its face. And in this case, I think it's weighing down the company from the front. So that's really the biggest issue I have with the company, is actually its management, its like idea, its business model, if you want to say. So just a quick overview before I go into the business model. Statistics here, we got market cap, enterprise value. So they're roughly flat when it comes to cash in the bank versus debt at the moment. They don't have a PE ratio because they lose money, but they do have a price to sales ratio, which is 3.21. So the forward PS is 0.33, which is quite ambitious. I wouldn't know if that's going to be delivered or not in the next year or two. So I don't know. I mean, unless they're in the midst of a massive production boom, it could happen. But all that is not enough, because when I was looking through the 20F filing, I understood something. Okay, let me see if I can find it here. Okay, so this is what's going on. So China, this might be facts you didn't know, but China also has subsidies. They're listed here if you want to read them on the 20F. I'm gonna zoom this a little bit, so in case you're on a computer, you can probably read through it, but you can open up the 20F yourself and read through it, word for word. But basically, this is how they make money, right? First, they have the battery upgrade service, which is part of probably their premium package service type of deal that gives you the housing and whatnot. I don't know if you get the housing automatically by purchasing the car or anything. Somebody can put that in the comments if you wish. But they also have, the sales of charging piles, or are these pylons? I don't know, piles it says over here. But I'm guessing like that means like a charging point in your house or something. I don't know. So anyways, yeah, piles, charging piles, whatever. So sales packages, that basically, like battery swapping service and other byproducts, okay, that you can buy around NIO. But also they have this, not only do they have subsidies when selling the cars, which are not listed on this page per se, but I read it somewhere else in the 20F. They have, incentives by the government, and the companies that are selling the cars to you automatically deduct those. But the company is actually subsidizing NIO, and it's still losing money, right? You just keep that in mind. The cars are priced pretty low for what they are, right? The cars should be much more expensive than this, but they start at just like under, I think, 63,000. Oh, excuse me. It's 4 o'clock in the morning, but I'm here. Okay, there's other reasons why I'm up at 4 o'clock in the morning, which I won't share with you right now, but there are legitimate reasons. Okay, trust me. So anyways, they sell the package swapping. They have subsidies, and also they sell automotive regulatory credits. Does it sound familiar? Just like in the U.S., sales of automotive regulatory credits. So what they do is, because their cars are very efficient, right? They go very long with very little energy. That's the reason why the government awards them these credits, which they then turn around and sell to other companies so they can produce gas-powered vehicles, which are definitely not subsidized, right? So it's very interesting to me that China has a very similar regulatory structure when it comes to electric vehicles, like companies in the US. Maybe they did that just to compete. I don't know the ins and outs, but I'm just finding out these details, and it's very interesting to me. So basically, the model, I think their vision and model is a little bit skewed. I don't want to call it, autistic because I want to be more politically correct than that. and I do like the car, and I don't want to shit on the company. Like, they're doing really well for themselves right now, and obviously they're still growing, although there are many things that prohibit their growth. Like, I think there's just those little quirks that they think they're, I don't know what they think they are. They think that it's their edge, or they're cute or whatever, but I don't think everybody finds it that way. Um, and I don't know how much market they're gaining versus losing by doing that. I've never heard anybody take a German car and complain about, anything like that at all, about the quirks of the German car. Like, I mean, it's basically the standard. Like, it's very straightforward, right? But there are no Nemos and Minos, or whatever the heck that Tamagotchi computer is in the middle. There's a nice, like, if you buy a Porsche, there's a nice, like, analog clock in there, something that looks super classy, right? Like, there's no gimmicks, okay? There's not just like some digital like dashboard thing. I mean, there's an actual analog clock in there. I think it looks very stylish. So it's very like refined taste. It's for people who actually enjoy vehicles, and I think that's really important. Okay, I think that's not to be underestimated. It's something I think Tesla underestimates. So yeah, you might get like the practical buyer who just needs, energy saving, um, cost saving type of, vehicle that doesn't run on gas, or whatever the reason is that you want to buy a Tesla. It's really isolating like the car enthusiast, and I think that's important because everything falls from the car enthusiasts. Okay, like, you don't see. This is why I don't know about Tesla long run. They're gonna have to make some changes, I think, in order to stay dominant for a very long period of time. But I could always be wrong on this, but this is how I see it, and hear me out. Let me know if I'm wrong, okay, in the comments, if I'm losing my mind here. But you know, it's just like clothing, right? It starts from the top, okay? Whenever something is overpriced, like if you're just buying clothing to have a shirt on your back so you're not cold, you can spend $2 for that, right? You can spend $2, put something on your back, and it's fine. But we're talking about things that are overpriced, things that you're buying for their, brand, for the cachet value, for enjoyment, right? Something that has nice fabric, that feels good on your body, that's like styled well, that looks good, that like, speaks to your personality, something that shows status, all right? So that's what I'm talking about. So it starts from the top, right? It starts from those like fussy little, like designers with their fashion shows, and their names and whatever, and all that fashion world. It all starts from there and it trickles down. Okay, things start there. The ideas get dumped down. It gets designed for the regular person, and now here we are, running around with our LV clutches and Rolexes and whatever else, on the street, showing our status and personality or money or whatever you want to say. But it really just starts from that top. It starts from the enthusiast. So the watch enthusiast, right, decides that Rolex is a pretty good watch, or you can pick any other watch brand if you want, whatever, Omega, it doesn't matter. But I'm just picking Rolex because or because it's well known. All right. So it starts from the top, and I think that, if a car enthusiast is not in love with the car, it's not going to trickle down in that way. It's just going to be looked at as an efficiency vehicle, and I think that's exactly why Tesla really blossomed with the Model 3, is because the cost went down, right? It's like the Walmart of cars, okay? You want to just bring us the most electric cars, the most, reliable, efficient, fast performing electric cars possible at the cheapest price. So that's kind of what Tesla is doing, right? It's not trying to go for the top market, but NIO, it looks like it's trying to out edge car makers like Tesla. They're more akin to like a Lucid, okay, the other EV car company. They're trying to out edge it on the status part, and that's where the problem is at, right? They need to innovate on design. But if you, as I look through the interior of the NIO, besides the materials, the design itself looks very similar to a Tesla. Okay, so they definitely need to do better than that. So that is my argument, right? I think that they need to be trailblazers in design, right? Because you're not gonna out trailblaze Tesla when it comes to, you know, efficiency performance over price, right? They've got the mass market advantage. They got the gigafactories. Like, how are you gonna compete globally with Tesla on that? It's impossible. You're gonna be a boutique store, and that's it. Okay, and then you have to compete with other boutique stores, but at least that's a better game to play than competing against Tesla on mass production right now. So anyway, those are my 2 cents. I think NIO is in trouble for that reason. The company is not bad. I like the products and everything else, but I just see from like a development standpoint, from growth standpoint, from management standpoint, I just see issues that I think they're just gonna drag them down, and I can't see this company flourishing until all these issues are fixed or at least addressed and improved. But that's just my opinion. I'm one guy. I'm just an individual investor. I'm not some guru or anything like that. So the only thing I can do is just give you my opinion on the matter. And for that reason, for those reasons that I've listed, I will not be investing in NIO unless it's like really dirt cheap and is about to bounce back like it did not too long ago. I missed my opportunity. I actually have a couple calls on this Friday just to play short-term play, but I'm definitely not going to be a long-term investor in NIO until those issues are addressed. Let me know what you think about the company, if my assessment is fair or unfair, if I'm just, talking out of my ass. Like, let me know what you think about the company in the comments below. All right, thanks. Peace out.